Hi everyone, welcome to Vantage Educational Session. So for today, we will be doing our MACD series. This will be a session covering on MACD, the basics of how we can use them and how we can apply them in our analysis. Okay, so I see that there's quite a few of us here, right? So very warm welcome. So if you guys have any questions along the way, please just feel free to put them under the questions chat, right? So either under the Q&A chat or questions chat. And I'll just give it about 1 to 2 more minutes before we kickstart the session. Okay, I see that one of you raise your hands, right? So if you have any questions, right, so if you have any questions, right, just feel free to put them under the questions chat. So I have both the chat box as well as Q&A box open. So I will be able to see any of the questions that you guys have. Okay, so there's no need to raise your hands. If you have any questions, just put them under the chat. Okay, so before I start the session, right, I have some of you asking for the recordings of the earlier sessions. So you can actually access them here, right? So for this, you can just go to vantagemarkets.com. Let me just bring this out in a minute. Okay, how long is this session? So this is a 30-minute session. Okay, so in this case, right, let me just bring this up. So for those of you guys who are looking at a recording, okay, I hope you can see my screen. So this is, we have all the sessions recorded, right? And they're posted on our YouTube page. So you can just go to vantagemarkets.com and under educational sessions. So under education and tools, educational webinars, right? So this is where you can sign up for all the sessions. We have them on a daily basis as well as the topics. You can check out the topics and the speakers. So if you want to access the earlier sessions, right, you can go on, just scroll below, right? And this would link you to the YouTube page. So we have the sessions posted here. Okay, so this is how you can access the educational series. So if you're keen, right, please sign up for it here. We do have it on a daily basis. And for this month, right, we will be covering for our educational series, mainly on MACD. So from beginner topics, right, covering the basics of MACD, how we can interpret them, all the way to creating trading strategies around them. Okay, so let's kickstart our session. Let me just share my screen. So back to the slides. Okay, so just a quick introduction of myself. I'm Li Sing. I provide FX advisory to institutional clients. You can also find me on LinkedIn. So if you're watching a recording of this, if you have any questions, please feel free to drop me a message on LinkedIn. If you're with us live right now, right, please feel free to put your questions under the questions chat. So just a quick disclaimer. The information presented here is not to be treated as investment advice. It's for educational purposes only. So throughout the session, if you guys have any questions, right, I have both the chat box and Q&A box open. So just feel free to type your questions there. So for today, we will be covering the basics of MACD, essentially understanding what this indicator does, and also how we can interpret them, right? So if we're to put MACD onto our charts, right, how can we actually apply this indicator? And we'll also move on to use MACD to identify bullish and bearish signals. So for this, right, I will be using TradingView. So for those of you guys who have TradingView, you can also open up your charts, right? So this is a free, you can sign up for a free account with them. So this is basically what we'll be looking at. Right, so let's move on to looking at MACD, right? So what does MACD stand for? Right, so MACD itself, is actually short for moving average convergence divergence. So if we load an indicator, right, we load MACD indicator on the charts, you can see that there are three components that make MACD. So these three components are basically our MACD line, our signal line, and our histogram. Okay, so we will take a look at them in details, especially when we open up our chart on TradingView in a moment. So just understand for now that MACD itself is a trend following indicator. So what this means is that when markets are trending, this itself can serve as an indicator, right, to help us detect momentum. But in the event that markets are ranging, so if it's moving sideways, then in this case, right, this can generate false signals. So again, a big part of all the indicator series that we have covered so far, right, you can see that across all the series that we've covered, be it on RSI, stochastics, moving average, understand that all these indicators, they apply under different market conditions, right? So if we're looking at RSI or stochastics, they are more of an oscillator, useful in ranging market conditions, right? So you can see that in previous examples, we saw that if prices are in overbought region, right, in an uptrend, right, price can stay in overbought region for prolonged periods of time when markets continue trending higher. So it's important to recognize which indicator we want to use, right? So in a trending market, MACD can be useful, especially in helping us to detect a change, right, in momentum. So with MACD, right, there are, of course, the MACD line, right? So the MACD line itself, it's actually the difference between your 12-day EMA and 26 days EMA. So the reason why EMA, right? So EMA itself, it's short for exponential moving average. So think of, it's pretty similar to just a simple moving average, right? But the main difference is that for EMA, it gives weight to more recent price, right? So if you talk about simple moving average, right? If we take 20 simple moving average, right? It just takes the past 20 periods and average out the past 20 data. Whereas for EMA itself, right, more weight will be given to more recent prices. So for MACD itself, it's basically the difference between 12 and 26 days EMA. We have our signal line. So signal line, it's calculated using the 9 days EMA applied onto the MACD line. Right, so all of this, just understand generally how it works, and later on we'll move on to the interpretation of the signals. And then finally, we have our histogram, right? So histogram itself, they are the vertical bars that we see on our charts, right? So it's the difference between the MACD and signal line. So that's basically our histogram. So these three components itself would make up our MACD indicator here. Okay, so that's for the basics of MACD, right? Now let's take a look at our chart. So you can see here, right? So MACD itself, it's a trend following indicator. So we have two things to watch here, right? So you can see the two arrows that are being highlighted over here. So there are a few ways we can interpret MACD, right? One is looking at the crossovers. So crossovers itself, right? So this is actually the MACD indicator. So if you load the chart on TradingView and put on the MACD indicator, you can see that this is how it looks like. The blue line represents the MACD line. The orange line, right, it's the signal line. So it's the 9 days moving EMA of the MACD line. And this is our histogram, right? So if you notice here, so notice that whenever the blue line, right, it's above the orange line. So essentially our MACD line is above our signal line. This case, right, you can see the difference. The histogram will be above 0, right? So it generates histogram that's green, right? So it's above 0. Whereas if your blue line, it's below the orange line, right? You can see in this case. So if the blue line crosses below the orange line here, right? All these examples that we're seeing, you can see that histogram itself would be in the negative territory. So one way to watch this, right, if we are looking at just crossovers of MACD and signal line, it's another way to look at it. It's right looking at the histogram, because histogram is basically the difference, right? So if the difference between both lines are wider, you can see that it generates a larger histogram value. Whereas if the lines are relatively narrow, right, the distance between them it's small. And what happens on the histogram is that you can see that it's near zero, right? Or we are seeing slight fluctuations. So that's the idea, right? So in terms of the significance of the MACD line, right, we have two things, right? So we look at crossovers, right? So there are two ways you can interpret the crossovers. One would be looking at the bullish crossover. So bullish crossover basically happens when your MACD line, it's above the signal line. So when MACD crosses above the signal line, you can see here, right? This itself, it's a bullish signal, right? So it indicates potential buying opportunities. But as all the other series that we've covered, right, we don't want to trade solely in isolation. This can be used as a confirmation signal. But what we want to understand is that along with this, right, understand the general direction of the market. So as we have covered, right, so for the benefit of those who missed the market structure session, right, the idea is that in an uptrend, right, prices will continue forming an uptrend. And in this case, we can see that the highs themselves are generally constant targets, right? And the lows are not being broken. So what this suggests is that if prices are trending in an uptrend, especially on your higher time frame, right? If the direction is moving to the upside and price did a pullback, right? If it pulls back low enough within the last leg, so this would be the last leg of this whole move, right? Before we see the pullback. So the assumption is that this uptrend itself would continue unless there is a change in the direction or if there's a change in market structure. So we will take a look at examples in more detail, right? But that's the general idea. So when we are looking at MACD for our signals, right? If you use MACD to generate signals, what we want to understand is that at any point in time, right? So if markets are in an uptrend, then in this case, we're looking at bullish crossovers in an uptrend, right? Because this crossover themselves, they represent buying opportunities and it's aligned with the general direction of the market. Right, so or what we call order flow, right? So if markets are forming higher highs and higher lows, it's showing you bullish order flow or bullish market structure. On a pullback, right, if MACD is showing you bullish crossover, then that itself would be aligned with the general direction of the trend. Right, it's important to understand this simply because you can see that when prices are in an uptrend, right, what happens is that be it for oscillator or even for trend indicators, you can see in an uptrend, right, when price does a slight pullback over here. So let's assume this example, when it did a slight pullback, this pullback itself, right, could correspond to a crossover of the MACD line, right? But what happens is that this is just a slight pullback before price continues to the upside in the direction of the trend. So as much as possible, we try and incorporate market structures, right, especially on the higher time frame with this indicator. Okay, so that's for bullish crossover, and the same will apply for bearish crossover. So you can see bullish crossover, right, what we're trying to look for, or what constitutes a bullish crossover. It's when the MACD line crosses from below, right, it crosses above the signal line. So this is an example of a bullish crossover here, right? You can see MACD crossing above the signal line. So again, MACD is our blue line. Signal is our orange line. So when MACD crosses above the signal, you can see the blue line crosses above the orange line. This itself, it's a bullish signal. Okay, so that's one. Right, another thing that we would cover in more details, right, it's about divergence. So basically, there are two types of divergence. There is bullish divergence and there is bearish divergence. So bullish divergence happens when prices starts forming lower lows. You can see that it continues to the downside. But on MACD, you are seeing higher lows being formed. So this is a sign that there is a slowdown, right, in momentum, or the bearish momentum. It's not as strong, right, and we could be seeing that change. So again, right, the same question would apply, right, because we don't want to trade just divergence by itself. So what we need to understand is that this divergence, right, when would it be most applicable? It's most applicable on your lower time frames, right, if the general direction of the trend is bullish. So again, the same example, if prices are forming higher lows and higher highs, on that pullback itself, right, you can see this pullback, assume that we're on the 4 hours time frame. Within this whole leg of the pullback, right, if you move this time frame down to, let's say, your 15 minutes time frame, what happens is that you can see within the pullback leg, prices would start forming your bearish structure coming into the leg of this whole move. So in this case, right, we understand that on the higher time frame, it's still bullish. So what happens is that when there is a divergence that happens, right, on our MACD, this would then show that the lower time frame, it's showing a change in structure, right? So it's best if price starts breaking the previous high. This change in structure would then be aligned with the higher time frame's direction. Okay, so we won't cover so much of divergence and details for this session, but we will be looking at more at crossovers, and divergence will be covered in the following session. But just understand that there are two ways we can look at MACD, right? So one is of course looking at the crossovers. If prices are crossing, so if the blue line, the MACD line crosses below your signal line, this is a bearish signal. If the blue line crosses above the signal line, right, which is your orange line, this is a bullish signal. Of course, we don't want to trade them in isolation, right? We want to understand that it's combining them with the market structures on the higher time frame. That's one. The other thing that we can look at, right, would be on divergence, right? So as we have mentioned, on divergence, right, we are looking at basically a change in momentum. Prices continue to the downside, but MACD is showing you that this momentum, this bearish momentum is not sustainable, right? There's a potential change. And if this is accompanied with a change in market structure, it will be even clearer. Okay, so we'll take a look at another example later on euro dollar, right? Let's see if we can see the same thing apply on the MACD. Right, so that's in terms of momentum and MACD, looking at bullish and bearish crossovers. Okay, so for the next slide, right, we want to look at how we can actually adjust MACD, right? So MACD across different time frames would show you different interpretations of the chart, right? So for this, I'll hop on to Trading View, right? So let me just show Trading View and let's see what we have here. Okay, and at the same time, if you guys have any questions, right, please feel free to put them under the chat. So one other thing that we want to look at for MACD is understand that MACD on different time frames, right, shows different signals. But at the same time, right, as with any other indicator, the shorter the time frame, the noisier the chart, right? So shorter time frames, such as your hourly charts, they might be more sensitive to price changes. But at the same time, right, these are also ones because of how the lower time frames, right? So prices are more sensitive to the MACD is more sensitive to price changes, but it's more suitable for shorter term trading. Whereas on longer time frames, right, if you're on your daily time frames, you can see that those time frames itself, you seldom get the divergence, but this signals generally hold more weight. Okay, so let's take a look at an example on euro dollar. Let me just share the chart. So this is what we have on euro dollar, right? So on MACD here, okay? So you can see that across different time frames, right? It would show MACD itself, it's showing different signs, right? So if you're on the monthly time frame, right, MACD it's below 0. So you can see that we are seeing a bullish crossover here on the monthly time frame, where this MACD line crosses above the signal line and it's still below, right? You can see that it's still below 0. So maybe just to share a bit more on how I can look at MACD, right? So generally for MACD itself, on the crossover, right? If it's a bullish crossover, I try and look for MACD below the 0 line, right? So this can be the initial move. Of course, right, the different time frames itself would generate different signals. You can see that on the monthly, we have a bullish crossover on the monthly time frame. Your histogram itself, it's also above 0, right? And we're seeing this slight pullback in price. If we move down to the the weekly time frame, so this is the weekly time frame. So on the weekly time frame, we're seeing something different, right? You can see on the weekly time frame, prices are showing a bearish move, right? So this is just interpretation of the signal, price crossing below, MACD crossing below the signal line. That's one. And this is also accompanied with this slight pullback in price. That's the picture on the weekly time frame. So if we move to the daily time frame, right, you can see on the daily time frame, it's showing you pretty much the same picture as what we're seeing on the weekly, right? So we have a bearish crossover. You can see that on the signal line itself, the signal line is still holding above the MACD line, and it's also below zero, right? So what we're trying to say here is that you can see on different time frames, right, it shows different signals, but understand that in general, right, are the signals in line with what we're seeing in terms of the market structures. So let's say this example, right? So we use the same example, backtrack slightly to see how MACD works on this. So you can see that over here on the daily time frame, right? Moving to this area. So this move itself, we can see how prices are forming your higher lows and higher highs. It did a pullback, right? But in general, the structure itself, it's bullish on this move. If I were to put it in close, you can see this area in line chart, right? If we were to highlight the peak and troughs, you can see that prices are forming subsequent higher lows and higher highs. So in this case, when price pulls back into a support area or into a demand zone over here, right? So when price pulls back into this area, right? What we usually see before it moves on to the next leg or start a new trend itself, in this case, we can see that there'll be consolidation before price takes off in the direction of the trend. So when price consolidates, right, this is when we can go to the lower time frames, either on the 4 hours time frame or the 1 hour, and try and understand what it's trying to tell us here. So in this case, you can see that when price consolidates on the daily time frame, the first sign of a change in trend comes in here. So you can see prices on this whole pullback leg, it's starting to form bearish structure, right? So if you look at the structure of the market again, right, we can just highlight the highest and lowest point. So I'll just highlight the highs and lows, right? So you can just put it in close as well, if that's easier, right? So highlight the significant peaks and troughs. Okay, so if I were to trace the price movement, you can see that these are the general moves. And what we have here, right, the first sign of a change in trend comes in when price breaks above the last high, which is this area. So recall earlier on, right, we talked about bearish structure. So when prices are in a downtrend, it will continue to form lower lows and lower highs until there is a sign of a change in trend. And this is exactly what we observe here. You can see that prices starts forming your lower lows and lower highs coming down, right? You can see subsequent lower lows and lower highs. And the first sign of a change in trend comes in here, right? When price stops this structure and it breaks above the previous high. Recall in the downtrend, right? The highs themselves are generally not broken. So once there is a break of the previous high, right, this is the first sign that prices are indeed respecting the higher time frame support level. Okay, so once we have this, right, once we observe this break in structure on your higher time frame, it tells us that this is now aligned, right, on your lower time frame. Prices are now moving and it's aligned with your higher time frames order flow, or it's aligned with your higher time frames direction. So when that happens, right, this is when we can use MACD as our confirmation. You can be looking, right, following that break in structure. This can be looking at MACD forming either a bullish divergence. So in this case, we actually observe a bullish divergence here, right? So MACD can be forming higher highs, whereas prices starts forming your lower lows. That's one, right? So general direction. That's one to watch. And the other, it's of course our crossover. So recall we talked about crossover earlier, right? So bullish crossover just means that your blue line, which is your MACD line, crossing above the signal line. So when the blue line crosses above the signal line, right, this itself is a bullish signal. But of course, we don't want to trade all of them in isolation because without knowing the direction of the trend, right, all this can be false signals. So you can see here, right, there is a crossover here. It's also, the crossover also happened in a negative territory, right? But what happens is that if you moved it up higher, you can see that this crossover itself, right, even though it is a bullish crossover, price just continues trending to the downside. So what's important to note is that when we look at these crossovers, right? So all these crossovers or these bullish signals that are generated, accompanied with that, we want to identify that there is a break of the last high, right? So for bullish crossover, we want price to break above the last high, the last structure here, before this crossover becomes valid. So following the break, you can see that when price broke above the last high, this is when the bullish crossover becomes valid, right? So this is the crossover. And with this crossover, you can see that this would trigger a buy signal somewhere here. The earlier crossovers, right, they are not valid because if you take a look at structure, right, market structure, prices are still forming a bearish move down. Okay, so let's see if we can actually apply the same example, right, on a different time frame, right? So this is, on a different chart. So this is a picture of it on euro dollar, right? Let's take a look at another chart. Let's see for dollar yen. So same thing, we're trying to find, right, a change in structure, right? So on dollar yen, you can see this case, right? We have this area. So again, prices are, we start from the higher time frame first. You can see on the higher time frame, right, prices are holding above the support level. We have an ascending trend line that it's forming, right? So when price comes into this zone, this area here, right? So the first sign of support resistance or supply demand areas, right? So this is the area. You can see that before price actually moves in the direction of the trend, right? We're seeing practically a consolidation area. So price trading sideways, we see structures being formed, right? And when that happens, right, this is when we can go down to our lower time frame. So you can see when price comes into a support zone, it's trading in a range, basically an area where price respects both the support and resistance areas, right? So it's trading within a range. And once this happens, right, we can go to our 4 hours or 1 hour time frame to try and find a break in structure. So again, right, you can see pulling into the support zone. You can see on the lower time frame, what we have here is bearish structure. So again, right, the assumption is that if price continues to the downside, it should continue forming lower lows and lower highs. How do I know that this is an area that price would respect? I wouldn't know, right? Because price could just continue to the downside, reacted slightly to this zone before it breaks further. So in this case, what happens is that, right, in order for us to identify that price is indeed respecting this higher time frame support, we need to understand that there would first come that change in structure. So when price starts, or when price fails to break, to form a lower low and lower high, that's when this is the first sign that we could be seeing more buyers entering the market, right? Less selling pressure to push price lower. And in that case, right, we're trying to find bullish crossover to validate this. So you can see here, change in structure. This is the last high. This is our last high that broke the low. So this is the highest point, and price actually broke below this low. You can see here, right? So again, if the downtrend is to continue to the downside, we should not be seeing price break above this high, right? Because if it does, that's the first sign that there's a change in trend. And recall that we are sitting on our higher time frame support. So this is the first sign, right? So when the first sign of a break above, right? So when price starts breaking above the last high, right? This is when we are looking for bullish signals. So anywhere beyond this point, right? Before this, right, this crossovers might be valid, it might not be valid, right? But you can see this crossover, some of them here, right? Even though price did crossover, right? If you look at how price reacted following the bullish crossover, it just did a slight pullback before it continued to the downside. So we need this crossover to be, right, to only come with a break in structure. So if price continues to the downside, that's not a trade we want to take in the long term, right? Simply because any crossover itself just corresponds to a slight pullback. So in this case, you can see that this is the break in structure. So when price broke above, right, this is when we start looking for bullish crossover here. So you can see when it broke above, right, price came back into the support zone. This is also the 78.6 retracement for those of you guys looking at Fibonacci retracement, right? But the idea is that you can see following that break in structure, so following the break of the last high, this is when the bullish crossover would be a signal that we can take, right? So this would be a bullish signal, and you can see we can then move in the direction of the trend. So as with every reversal, right, you can actually notice this change in structure across the different time frames, right? So if prices are sitting on a higher time frame demand or support level, right, you can see that pushing into this demand or support, usually it's a downtrend, right? Because price have to make its way down into the support zone. So when it's making its way down into the support zone, right, on your lower time frame, it will start showing your bearish structure. So lower lows and lower highs. And how do I know whether this support zone is going to hold? Because price could just continue to the downside. So in order for this support zone to hold, right, essentially we need buyers to start coming into the market. And this buyers, right, will start accumulating orders. So when prices start trading sideways and it fails to form a new low, right, and it starts breaking above the last high, we can use this as a sign, right, to show that there is indeed a change in trend. Prices are respecting your support zone. And this accompanied with a bullish crossover on your MACD, right? It's sign that there is momentum, right? A change in momentum. If we're seeing divergence, that would be great, right? But we are not covering this in details today, right? So that's, I'll cover this for the next session, right? But that's the idea, okay? So if we take a look at another example, right? On pound dollar, you can see the same thing would apply. So across the different time frames, right? So let's just take a look at this example again on the 4 hours time frame. So the same thing, right? We can see price coming in to test this support and resistance area. So assuming that you're somewhere here in time, and you're seeing this move, right? Price coming in, it's starting to form higher lows and higher highs, pulling into the support zone here, this red zone that we've highlighted. If you move down to the 4 hours time frame, you can see that when price pushes into the support zone, right? If I take a look at just structure alone, market structure, you can see that pushing into the support zone again, right? This whole move, when it pushes into this support zone, this red zone that we have, it's bearish structure. So why is it bearish structure? Because prices are forming successive lower lows and lower highs. And in a downtrend, right? If the downtrend continues, price would continue to the downside, again, forming this structure. So this pattern would continue, right? So if you have you're not familiar with candlestick patterns, you can actually look at prices in close as well, right? Just identify the peaks and troughs. You can see that it's forming successive lower lows and lower highs. And once there is a change in structure, this is when, right, price starts breaking above the last high. You can see, right? So when price breaks above the last high here, right, this is the first sign that we can look for bullish crossovers of our MACD, because this would be aligned with the direction of the trend, right? Especially because it's sitting on a higher time frame support. And on your 4 hours, it's showing a change in structure. So when price breaks structure, right? So for those of you guys who want to automate the signals, right, you can look at MACD, so crossover of MACD, or even histogram holding above zero, right? Because when histogram holds above zero, or it enters the positive territory, it just means that your MACD line, it's above the signal line, right? So the blue line is crossing above the orange line. This is when your histogram, it's above zero. So once there is this structure confirmation, then we can take these crossovers as validations, right? So again, when you're in a bullish trend, right? So the converse is true. If you're in a bullish trend, prices starts forming higher lows and higher highs. You can see that any bearish crossover itself, right? It just corresponds to a slight pullback before price continues to the upside. So again, right, when do we look for bearish crossover? We only focus on bearish crossovers in a downtrend. So if prices are forming lower lows and lower highs, then it makes sense to look for bearish crossovers. But in this case, you can see that once this uptrend or this downtrend is over, right, and a new structure is being formed, what happens here is that any bearish crossover here, it's just accompanied with a slight pullback before price continues to the upside. And in this case, right, this is not favorable if we're taking short positions here, right, because of just this deep slight move below. Okay, so that's what we have for today. So if you have any questions, right, please feel free to put them under the questions chat. If not, right, for tomorrow, we will be doing our live analysis session. So you can also sign up for the session there. Okay, okay, you're very welcome, Shem. Okay, so I see that. Okay, so Rosan, if you have any questions, just type them under the questions chat. So I hope that this session is clear, right, in terms of how we can use MACD to look for signals, right? Looking at just crossover itself, bullish, bearish crossovers. So these indicators, right, as with any indicator, right, it's important that we combine them with market structures, because market structures help us to determine the general direction of the trend. And once that is established, right, this is where we can focus on which part of either the bullish or bearish crossover we're looking at. And the same thing applies for even RSI or stochastics, right? When do you want to look at overbought regions, or when do we want to focus on oversold regions, right? So in that case, right, we actually went into very deep details on which regions to focus on, right? So you can check out the stochastics or RSI series on YouTube. Okay, you're welcome, Mark. Okay, where should we put the support line? Melisho, right? So for support and resistance areas itself, we do have a series on them, right? It's on YouTube, but just to give a general idea of what support resistance areas are. So in any case, right, I try and look for areas that price interacted with multiple times, especially areas. So on the higher time frame first, right? So usually I'll start the analysis on the higher time frame, either on the monthly, weekly, or daily. So on this time frames, I try to look for areas where price interacted with multiple times, right? So for example, areas that you can draw a horizontal line across very clearly. So take a look at this purple zone that we have on the weekly time frame, right? So you can see that at this zone itself, price came in, tested as a support, held again as a support before we see this strong bearish break. And even when price entered this zone, right, we're seeing a hesitation, a break, and a retest of it as a support level, retest as a resistance, and right now prices are testing this zone. So this is one, right? If you're not comfortable looking at it based on candlesticks, you can also put it in a line chart, right? So just put a horizontal line across, right? You can identify maybe a horizontal ray. So the idea that I would ask myself is, at which point would I draw this horizontal zone across that easily divides this chart neatly, right? So I want to see an area or a zone where price tested and respected this area multiple times. So you can see here, right? This level itself is clean. It's very clear. What would not be clear, right, would be looking at levels like this, right, where you can see, for example, right, price coming in, not respecting this zone, but just whipsawing across. Okay, so these are not areas that I want to look at. And in general, right, as with any support resistance areas, right, instead of looking at a specific area, instead of looking at it from a specific level, I look at it based on zones. So zones is easier because it gives us a space that we can work with, right? So that if price wicks slightly above, it could be just sweeping orders, lying slightly above it before it continues in the direction of the trend. So for support resistance areas, right, there are three types of support resistance areas that we can look at. So support, I'll just go through the support zones, right? So for support areas, you have areas where price came in once, tested this zone, we saw a sharp reversal, and coming into this zone, right, price is again consolidating. But as with any other setups, you need to ensure that when price comes into this area, right, on your lower time frame, it is showing signs of reversal. So what I mean by this is that on the lower time frames, right, it's starting to show that change in market structure that we observe, right, in the same example that we saw earlier on euro dollar, pound dollar, and dollar yen. There must be a change in market structure to show that prices are indeed respecting this higher time frame support area. Because what happens is that you can see before it comes into the support zone, right, we're basically in a downtrend on the lower time frame. On the lower time frame, right, so let's take a look at this example. Let's say we have a support zone here, right? So we identify the support zone. So let me just do a quick replay, right? So coming into this zone, you can see that price, right? So assuming that we've identified this purple zone, when price pushes into this area, right? If you move down to your daily time frame or even on the 4 hours, you can see that when price pushed into this purple zone that we have, the support area, right? It's still forming bearish structure. You're still seeing lower lows and lower highs. So how do I know that prices are going to respect the support zone? The only way, right, price would respect the support zone is when there is a sign of a change in trend, right? So instead of this downtrend continuing, what happens is that price starts breaking the previous high. And this is the first sign that there is a change in trend. So this is accompanied with all the other examples that we've shown earlier, right? So we shown it on euro dollar, pound dollar, and dollar yen, right? We saw the break of the previous high. That is when this is a sign that we should be focusing on the bullish crossover on MACD. But without that, right, you can see this example, right, the change in trend did not happen, right? Rather, what happened here was that price pushed into this purple zone, which is supposedly the support area. But you can see this downtrend continue, right? So price continues to form lower lows and lower highs. And this itself ties back to the first structure, to the first part where we covered, right? In a bearish structure, prices continues forming lower low and lower high, and you can see the highs themselves are not violated. So if we want to witness a change in trend, right, we need price to first break above the last high, because this is the first sign that we are seeing here, which suggests that there is a change in trend. Okay, and once that happens, it shows that prices are indeed respecting the higher time frame support zone. Okay, so I hope that answers your question, right? So for support areas itself, right, I look at how price interact with the zone. But in terms of whether there is a confirmation, right, I go to the lower time frames to look for change in structures. Okay, so if we have no other questions, right, that's all we have for today, right? So for tomorrow, we will be doing our live analysis session, right? So with that, we have come to the end of this session, right? So thanks everyone, right, for being so responsive, right, and for all your questions. So we will catch you guys again tomorrow, right? Have a great day, trade safe, and we'll catch you tomorrow.